Hello and welcome to Market Cafe. I am Ankita Saxena and with me is my co-anchor Snehi Shah. Well, this is a show where we get you all the roundup of the news that moved the markets overnight and the news that will move the markets in today's trading session. So first up, let's quickly start with the global cues. Snehi, 8 straight days of gains coming in Wall Street. Big companies posting their quarterly numbers. Take us through what happened overnight.
Absolutely, Ankita. Good morning to all our viewers. Then let's quickly see what the US markets did then as a part of the global handover. And NASDAQ 100 futures slipped Wednesday evening after Netflix posted its latest quarterly results. Now the NASDAQ 100 futures slipped 0.6%, S&P 500 futures slipped 0.2%, while the Dow futures hovered near the flat line. During the regular trading session then, the Dow climbed more than 109 points or 0.3% in what was the index's 8th consecutive day in the green and its longest winning streak since September 2019. Meanwhile, the S&P 500 gained 0.2%, while the tech-heavy NASDAQ composite was also up with very minor gains, almost flat. But these gains came as companies are posting stronger than expected quarterly results, and 3/4 of the S&P 500 companies that have already announced results have topped estimates. And this is according to the FactSet data that's coming in. And shares of Netflix dropped 8% in after-hours action after the streaming giant posted its second quarter earnings report. The company posted 8.19 billion in revenue, falling short of the 8.3 billion revenue anticipated by analysts according to Refinitiv. Tesla shares tumbled 4% in extended trading as CEO Elon Musk and other executives said on an earnings call that vehicle production would slow during the third quarter due to shutdowns of factory improvements. Now, among companies that will be declaring results, you've got Johnson & Johnson, Travelers, American Airlines and Blackstone. All these companies are set to report earnings Thursday before the bell. Wall Street will also be keeping an eye on weekly jobless claim numbers and existing home sales data. Shifting focus from US to European stocks, then European stocks closed higher on Wednesday after UK inflation came in cooler than expected. The Pan-European Stock 600 index closed with an uptick of 0.3%, with oil and gas stocks up 1.1%. The FTSE 100 was up 1.8% as the British pound fell against the US dollar and the euro, the UK bond yields fell sharply. Now, UK consumer price index figures showed annual headline inflation of 7.9%, lower than a consensus forecast of 8.2% and down from that 8.7% figure in May. Core CPI was 6.9%, also below an estimate that it would hold steady at the 7.1% mark. And services inflation was also lower. So good numbers coming in on the inflation front for UK, positive handover coming in from US as well as UK, Ankita. Take us through what crude also did. So this was on the equity side, but also let's look at what commodities did.
That's correct. On the equity side also, we did see some profit booking coming in there because, the oil prices finally, they inched a little lower as, we did see some profit booking coming in there because we did see the oil prices go up a little. That was on the back of tighter US crude supplies and China's pledge to reinvigorate its economic growth. Now, the prices sparred some gains late in the session after both contracts had risen by over $1 a barrel. Now, strength in the US dollar has also been, weighing on the prices as well. If you look at the Brent crude right now, it's currently at $79.5 a barrel and the WTI is currently at $75.25 a barrel. So that's where the crude is at currently.
All right, let's also quickly look at all the important cues that you should be keeping on your radar today and all the important things that you should be tracking in trade today. Now, since today is Thursday, it is the day of weekly expiry, so keep an eye out on that. Reliance demerger, all eyes will be on that as today on July 20, which is today, the special pre-open session in Reliance will take place and Jio Financial will also get temporary Nifty 50 ticket. And on the earnings front, on the Nifty front, you've got Infosys, HUL, which will be declaring their numbers today. Come tomorrow, you've got HDFC Life, Ultratech Cement, JSW Steel. So keep an eye out on all these results. And also do not forget on the 21st, which is tomorrow, you've got the big boy Reliance that is going to be declaring its Q1 numbers. On the corporate action fund, you've got IndusInd Bank. The board will be considering fundraising today. And on the global cues front, you've also got the US initial jobless claim numbers like I mentioned earlier. So keep an eye out on all this data coming in today.
All right, then let's move on to the news that moved the global markets last night. Well, auto giant Tesla's share dropped despite reporting an all-time high quarterly revenue. The shares of the company started dipping during the earnings call as CEO Elon Musk and other executives failed to deliver precise specifications and start of delivery dates for the Cybertruck and for a robot taxi-ready vehicle. Musk and other execs also said during the call that vehicle production would slow down during Q3 due to shutdowns for the factory improvements.
And staying with earnings then, online streaming giant Netflix missed the street expectations in its Q2 earnings, leading to investors booking profits in the stock after a sharp run-up this year. The share saw a steep downfall as much as 10% in extended trading on Wednesday. Meanwhile, for the quarter, the company added 5.89 million subscribers, marking the second best quarter since the pandemic. The company also expects to add another 6 million subscribers this quarter.
And continuing with some more earnings, IBM reported its second quarter earnings that topped analyst estimates as the company expanded its gross margin. Revenue missed consensus estimates. Meanwhile, Goldman Sachs posted profit below analyst expectations amid write-downs tied to commercial real estate and the sale of its Green Sky lending unit.
And tech giant Microsoft's chief executive officer Satya Nadella's total windfall from the company crossed the 1 billion threshold. Microsoft's AI-driven rally has led to these gains, along with all the collected payouts. Microsoft's shares returned more than 1,000% since Nadella took over as CEO of the company in 2014. And earlier this week, Microsoft had also achieved its highest valuation on the NASDAQ index.
And Apple has been working on AI offerings similar to OpenAI's ChatGPT, which triggered its shares to shoot up as much as 2% to a record high. Apple has built its own framework known as AJAX to create large language models and is also testing a chatbot. Apple has so far held back from any big moves in AI. However, it has subtly pushed advanced AI in some of its products, such as Apple Photos, on-device texting, and the recently launched mixed reality headset Vision Pro.
And inflation in the UK has slowed in the month of June, marking its lowest pace in over a year, coming in at 7.9%. Remember, this was the central bank's target in May this year. Core inflation too cooled off 6.9%, which is a key metric for the Bank of England to gauge price pressures. Although the consumer price index, the CPI, remains well above the Bank of England's 2% target, it might bring some respite to the interest rate hike cycle in the UK. The next policy action is due in the month coming up, and analysts estimate a 25 basis points rate hike this time. We spoke with Nadia Elbilisi, who's a market analyst at Equity Group. Listen in to what she had to say.
From going down from 6%, it would be so much better for the economy to grow, to see substantial growth in the economy after the slowdown period that we're seeing right now. We're seeing a lot of stocks recover. We're going through a partial recovery period actually for markets right now, as we see inflation actually cooling down, economic indicators like retail sales also cooling off. We're seeing because it's summer season, so obviously a lot of that money is going to travels and so on, and less on sales, and that's why we're seeing a little bit of a shift in the economy right now. We're also seeing, as inflation cools down, which was the biggest fight in 2023, and that's why the stock market was doing bad at the start, but now we're seeing a kind of recovery period.
And well, the world's largest office has been inaugurated in Gujarat's Surat. The structure, Surat Diamond Bourse, is spread across 7.1 million square feet across 35 acres. The 15-story complex boasts of having 4,700 office spaces and a one-stop shop for over 65,000 diamond professionals. And this building has pipped the Pentagon in the US as being crowned as the world's largest office building. My colleague Lisa is here to tell us more on that. Take it away, Lisa.
Well, let me ask you a question. Which building is the world's largest office building? You would say the US Pentagon or the Burj Khalifa, right? But that mantle has now gone to a building which is right here in India. Yes, it's the Surat Diamond Bourse building, which is built with an investment of over $388 million. It has broken the record of the US Pentagon, which till date was the world's largest office building for over 80 years. It was built in 1943. Well, the Surat Diamond Bourse has now surpassed even notable buildings like Burj Khalifa, the Chrysler World headquartered in US, the Exchange 106, which is at Malaysia, as well as the Willis Tower, which is in the US. Well, that's indeed a rise with India moment for us, right? And now coming back to the Diamond Bourse building, the building is based in Diamond City. It's in Surat, where nearly 90% of the world's diamonds are cut. And the newly opened building, it's a 15-story complex spread over 35 acres of land with 9 rectangular structures sprawling over 7.1 million square feet of floor space. And unlike what you encounter in the big cities, there are no parking hassles at all because the parking area that spreads across 20 lakh square foot. New Delhi-based architecture firm, which is Morphogenesis, is the creative cum architectural brains behind this project, which took a mammoth 4 years to complete. But then, as we know, that Rome wasn't built in a day. Now let's take a look at how the interiors fare. This rupees 32 billion project, it houses dining, retail, wellness, as well as conferences facilities, along with 131 elevators, and they will connect 4,000 office spaces and over 65,000 diamond professionals, including the cutters, the polishers, traders. They will be working out at this building. And the architects, they did a fab job with making this sustainable too, because half of the building that will be used, that will be cooled using natural ventilation, while the common areas, they are powered using the solar energy. So it's a green building too. But there is some wait before this project opens its doors to professionals, because later this year, it is expected that after Prime Minister Modi inaugurates this project, then it will be officially opened. So indeed, it's a proud moment for us, with India rising, shining, and housing the largest office building in the world.
All right, Surat now has the largest office building in the world. Interesting take coming in there. Thanks, Lisa, for all those details. But with that, let's quickly slip into a short break. Apologies. We'll come back with what the Asian markets are doing on the other side.
Welcome back. You're watching Market Cafe with me, Ankita Saxena and Snehi Shah. Before we begin with the rest of the news flow, let's quickly take a quick Asia market check. Asian markets have opened up, and they have opened up largely in the red, ahead of this slew of economic data that we're expecting across the region. Investors will be closely watching out for China's 1 to 5 year loan prime rates to see if the country's government will really attempt to spur the growth by cutting rates days after China's second quarter GDP came in below the expectations. Now let's look at Nikkei first. Nikkei opened in the red as Japan posted its first surprise trade surplus of 43 billion yen, its first surplus in 23 months, and it is actually down 228 points in the red. We'll quickly go across to Shanghai, where Shanghai is at, let's flash it on your screen. Shanghai is absolutely flat, up 0.02%, very, very flat in trade. We'll quickly go across to, we'll go to Kospi. Kospi is also in the red, started the day in the red, has inched up a little, is well in the green now, up 1.07%, just 1 point, absolutely flat, had started the day in the red, is in the red now, is in the green now. Hang Seng is up 199 points, bucking the trend there. And so is Shanghai apparently. Shanghai is, ASX 200 is also in the green. It's up 0.2% in trade. So largely we have a mixed hue coming in there. GIFT Nifty is up 7 points, absolutely flat in the green. And if you look at the US futures also, US futures are also quite flat, mixed there, mixed set coming in there, hinting towards a rather muted start for the Indian markets as well, Snehi.
Absolutely, and the GIFT Nifty coming in absolutely flat. So let's see how that pans out for our markets this morning. Let's take a short break.
Welcome back. You're watching Market Cafe. Now let's move on to news on the domestic front. India's auto sector is on a path of growth. After registering record sales, companies are preparing for the coming festival season. However, companies are keeping a close watch on monsoons and the macroeconomic developments, and exports to some markets are also a matter of concern. To discuss all of that and much more, ET Now's Sumit Chaturvedi caught up with Prasann Firodia, who's the MD and CEO of Force Motors, in this exclusive interaction. Let's take a look.
Post-COVID, the recovery has come back pretty well, especially in segments in which we operate as an OEM, which are predominantly shared mobility segments, were significantly affected during the COVID period. So even for us, the key segments are, tour and travel, staff transport in IT, or school buses. These were our critical segments and were completely flat. However, in the last 1 year, there's been very good recovery, and the year looks very promising. Overall, business is looking much, much better.
What's overall outlook of the auto component sector? Because you are in that segment also, apart from being an OEM and CV player. What's the outlook on especially on the auto component sector and its demand, which is going to meet?
The auto sector is significantly riding on the OEM side. But generally, things are looking good. There is a small correction that you can see in the heavy segment currently. There is a small correction in terms of slowdown you can see also on the tractors currently. But generally, from an auto component perspective, especially for companies who are not just focused in India, but who are exporting significantly, situation is a little concerning because globally there is a slowdown. The US economies have started to slow down. You see a lot of slowdown in the European market. So from an export perspective, as a tier one, as a component supplier, it would be important to wait and watch and see how things progress. But as far as India goes, as far as the Indian industry, the automotive industry is, so far things are looking comparatively on a strong wicket though.
Alright, and that's the word coming in from the MD and CEO of Force Motors. And while we are delving into the future of the automotive sector, here's a part of the interaction we had with the new head of Jeep's India's operations, Aditya Jairaj. He shares the company's growth roadmap. He says that over at Jeep, they have model upgrades lined up for the year. And yes, he also talks about their EV plans. Listen in.
We've got 4 nameplates now. Yeah. We've got 4 strong nameplates. The first task for us is to maximize what we can with our existing nameplates, right? With Compass, Meridian, Wrangler, and Grand Cherokee. So we started building the Grand Cherokee in India last year, 2021. We started building the Wrangler in India. So we have to maximize with what we have first. However, at the same time, consumer needs, consumer demands are increasing, or changing rather. They're changing. So that's something we constantly keep in mind. Our planning process takes this into account. And if the consumers want a certain offering, that's something we capture, and then we'll bring it to market if the case provides. So are we going to increase the lineup in India? At this point, I would say we need to focus on what we have at this point, and we are looking at other offerings where customers will see value.
Okay, so anything before December 2023, any offering that is planned? I guess no.
I'll say this. The answer to that is, we've got actions lined up on our existing products. On our existing products, we've got actions lined up, which you will see before the end of 2023.
Okay, so that's something that we will be waiting for. But Aditya, in the India growth story, one new fuel engine is what the auto enthusiasts are looking forward to, is the EV segment. Why so is that Jeep India is not present in the EV segment yet, because from all other brands, be it the entry car segment, car companies, or from the luxury, we have the offerings of electric vehicles. What's the India strategy when it comes to EV, and what sort of ideology that the company has on the electric vehicle side?
Perfect. So when you talk about EVs, the value proposition needs to exist right with the customer at the center. So this is something we take into account constantly while developing what our near-term and medium-term product strategy is. So today, consumers in different segments are asking for EVs. This is something we're taking into account while putting together our near-term strategy. So simple answer to your question, with Jeep India, EVs will come.
well, we see early progress in UAE and Singapore, but actual infrastructure has to be built up. It will take quite some time. That's the word coming in from NPCI Chief Operating Officer. Listen in to this exclusive conversation only on ET Now.
I think we are growing at about double the industry growth rate. So we feel quite good about that. I cannot speak about the future because we're a public listed company and that is a price sensitive thing. So I'd refrain from that. But otherwise,
UPI going live and going international is something that we are very excited about. It's certainly a proud moment for all of us as Indians. And the idea is really to take the UPI experience we have here in a way that we can use it wherever we travel. So I think we've got now bilateral partnerships with quite a few markets, driven by the agreements between both.
At the management level, yes, we've had some conversations on what we should do with this cash. It is unlikely to be acquisitions, etc. It's much more likely to be something organic or return of funds to shareholders to a large extent. Most of it will be return of funds to shareholders. But I think it will happen over time. And I don't think there is, any timeline or date fixed on it. And we are yet to have a board conversation.
All right. You also plan to have 100 CR profit after 1000 CR for that matter, profit after tax by financial year 2027. So will it include other income on the existing cash balances of 5000 CR that you have?
It includes, it's a PAT number. So PAT always includes your interest income and it takes away your ESOP charges. And after all of that, you reach the PAT after all your depreciation costs, etc. So yes, it's a PAT number. It will include everything.
Okay. And are you confident of the strong growth despite high base of the Q4 of financial year 2023?
I think we are good. We are quite comfortable. See, you would always look at a current quarter because we have not disclosed results in respect of last year same quarter and in respect of the last quarter. It being a seasonal industry with some higher growth seen around March, you will expect some differences from there. But we are quite happy with our situation.
Everyone is talking about the winter in the funding that we are seeing. Where do you see that going forward in the next by the end of this financial year?
I don't know where the winter is. We probably are maybe in an autumn or a spring. We've had a very warm summer for almost 7-8 years. I think interest rates where they were was too low, unprecedented as far as the world is concerned. I think we don't know what the future holds. So far, the interest rates are not showing any signs of letting up. And I don't know how quickly funding returns in the markets. But again, I'm not an expert on this. Neither am I an economist who can kind of predict the future, etc. My point is you keep building your businesses and, there will be rainy years and there'll be sunshine years. And that will keep happening. And when there are sunshine years, like let's say 2021, everybody will value things like crazy. And there will be, let's say, autumn years like the current one.
All right, that's the word coming in from the management of PB Fintech in an exclusive conversation with ET Now. But with that, let's quickly slip into a short break. We'll be right back with all the stocks we're tracking for you this morning, right on the other side. Hi there, good morning. Welcome back and thanks for staying tuned to Market Cafe. Now, the GIFT Nifty is looking very flat, indicating a flat start to our markets this morning. But my colleague Ansh joins us in the studio to take us through all the stocks that he's keeping on his radar today. Good morning, Ansh. Take us through the list.
Hi, good morning. So, Olectra Greentech will be the first stock in focus for today's trading session, as company has got an order to construct electric vehicle manufacturing facility for Mega Engineering, the project cost for which is around 395 crores. Apart from this, Shree Cement will also be in focus as company has received a letter for inspection from Ministry of Corporate Affairs. PNC Infratech will also be in focus as company has got an order for 3 projects with National Highway Authority of India, the project cost for which is around 3,264 crore. Moving on to Dr. Reddy, USFD has completed an inspection at company's manufacturing facility in Andhra Pradesh and it closed with 0 observations. Well, this is a positive news for the company. Now let's look over few earnings. Hatsun Agro reported revenue at 2,150 crore, which is up by 7% on year-on-year basis, whereas PAT has jumped by 54%. Tata Communication has reported revenue at 4,771 crore, which is up by 4.4% on quarter-on-quarter basis, whereas PAT rose by 17%. LT Finance Holdings total income rose by 8% on year-on-year basis, whereas PAT has jumped by 104%. Canvin Homes net interest income is up 14%, whereas PAT is up by 13%. Lastly, Phenolics Industries revenue is down by around 1% on year-on-year basis, but net profit has managed to rise by around 15.9%.
All right, thank you so much for those details, Ansh. But the other stock that will be in focus today is NASDAQ, as it posted its Q1 numbers. And if you look at the numbers, it posted a weak show. There's some softness that has come into the results post the Q1 good result. And let's compare the two quarters. First up, the returns, like I mentioned, this quarter was much softer than the quarter prior to this. We did see the constant currency growth that came in at 0.4% on a quarter-on-quarter basis versus the 5.3% that was clocked in last quarter. Now, even the order book on the order book front, it declined on a quarter-on-quarter basis. The total employee headcount was down to 5,592. So overall, the show was pretty poor for NASDAQ for Q1, especially on a sequential basis. But if we look at on the acquisition front, it has signed a definitive agreement to acquire a Business Analytica Solutions LLP, and engaging in the data cloud and modernization related to supportive manpower services. Now that is what has happened on the acquisition front. So overall, net the result has been rather somber compared to the previous quarter. So that's a stock that will be in focus in today's trading session.
All right, and along with NASDAQ, you also had Tata Communications that released its Q1 numbers yesterday, and the numbers have come largely in line with street estimates. Let me take you through the numbers on a quarter-on-quarter basis then. Revenue was up 4.4%, came in at 4,771 crore rupees versus 4,569 crore rupees. On the other side, you had the EBITDA that was down 1%, nominally down, with a downtick of just 10 crore coming in on a quarter-on-quarter basis. EBITDA margins came in at 21.5% versus 22.6%, a slight downtick there as well. Net profit, which is the PAT figure, was up 17% at rupees 382 crore versus 326 crore on a QOQ basis. Let's look at all the factors that led to these results for Tata Communications in the first quarter. Now, underlying data business revenue growth was strong, came in at 4% on a quarter-on-quarter basis. Margins were lower owing to switch consolidation. EBITDA was lower owing to a drop in voice business and drag from subsidiaries. Margins too came lower, and margins came lower owing to the switch consolidation. EBITDA came lower due to a drop in the voice businesses and drag from subsidiaries as well, like I mentioned. And net profit jump was higher as in the previous quarter. Depreciation had a one-off of rupees 60 crore related to the write-off of some cable residual value. And the Q1 numbers include 2 months of switch numbers. The acquisition was effective from the 1st of May, as well as the digital services revenue has grown 38% on a year-on-year basis, partly due to the switch integration. And this is adjusted for the merger. Revenue was up 28% on a year-on-year basis.
All right, then moving on to another stock that will be in focus today, and that's HUL, and that is on the back of the Q1 results that it will be posting as of today. So what is the street expecting, and what are the triggers for the stock? What to expect? My colleague is joining in to give us more details. Over to you, Winnie.
So yes, in terms of HUL's numbers, what we're expecting is a revenue growth of only around 8%, profit growth of 14%, while margins a slight bit of an expansion of 80 basis points. Let me break it down through what we're expecting in terms of numbers. So volume growth is expected at around 5%. So this time it's going to be like more of a volume-led growth than a pricing-led growth that we've been seeing over the last couple of quarters. We're seeing that reduction coming in terms of the pricing growth, and now it's going to be shifting more towards the volume growth of the company. But that is something that we'll watch out for in terms of commentary as well. well. Margins expected to improve sequentially as well as on a year-on-year basis. Let's not forget correction coming in the PFD prices, palm oil prices. That's a factor that will be supporting the margins of the company as well. The only place they've taken a price hike is the HFD segment, where the company has taken price hikes because those milk prices, milk inflation has still continued, and that is one of the challenges that one should watch out for from HUL, because that was a concern going on for the company in the last couple of quarters as well. Modest growth expected in the home care as well as the beauty and personal care segment, because in some of the categories like the soap as well as laundry segment, they've taken a bit of a price cut in these segments as well, so keep an eye out on that one. Summer portfolio obviously expected to see a bit of a decline, so that is something like an ice cream segment that could see a bit of an impact coming in. Wait out for the commentary in that as well. Factors to watch out for, obviously demand as well as a margin outlook commentary. There's a new CEO that has come in, so commentary from Rohit Jha, what is the strategy going forward, are the key factors that we are keeping an eye out on as well. What is the traction in the nutrition business, improvement in the rural business, rural recovery, how is that shaping up, are key factors to watch out for.
All right, so that's all that you should be keeping an eye out for FMCG major HUL's results today. But when you also take us through how we are expecting Havells Q1 numbers, because Havells will also be declaring its results today.
Absolutely, consecutive day of upgrades coming in as well, and now Motilal Oswal is also maintaining their rating on Havells as well. They're very positive on the turnaround story coming in for Havells. Let's not forget that Havells will also be reporting its numbers today. So in terms of the cables and wires segment, that is also expected to see a strong growth coming in. Yes, this time around we expected, and what we saw coming in was a muted session in terms of the summer demand trends. But yes, overall we are expecting Havells to see a strong recovery coming in. That's what brokerages are highlighting, whether you look at Motilal Oswal or whether you look at UBS. That too was quite positive on Havells in terms of the commentary that they're expecting from Havells going forward. They expect a strong turnaround story coming in. Even in Lloyd's business, they expect that also will actually start seeing a recovery coming in the next 12 months, is what Motilal Oswal has also highlighted. So just keeping an eye out on Havells. Obviously 2 upgrades and 2 brokerage notes giving a thumbs up to Havells, but also their earnings coming out tomorrow.
All right then, and amongst the other stocks, we have Infosys also that will be reporting its quarter numbers. And let's look at what the poll is saying and what the street is really expecting. Let's look at the margin. Is the margin expansion on the cards? You know, how is the revenue expected to grow on a quarter-on-quarter basis? Now, well, let's look at it on a consolidated quarter-on-quarter basis. The constant currency growth is likely to come in at 1% from the negative 1% that we saw on a sequential basis. Also, the revenue is expected to come in at 37 crores. The margin is also set to come in 20% higher than the previous quarter, and the PAT is also likely to come in at 16,150 crores. Now let's look at the key expectations from the company. Now the deals that they have won is likely to offset the deal cancellations that we have seen in Infosys. We also expect the margins to expand on easing supply side concerns that has been plaguing the company for a while, and we also see productivity benefits that will be aiding their margins, and the wage hikes is likely to be pushed higher to quarter 2 and quarter 3 is what we're expecting. Also, the TCV numbers will be flattish on a quarter-on-quarter basis, and those are the expectations that the street is really penciling in. Also, for the FY24 guidance, if you look at what the guidance has been, the revenue growth is penciled in at 4 to 7%, and the EBITDA margin at 20 to 22%. So that's the guidance that has been given for FY24. Let's look at the factors that we need to watch out for. Then the guidance, of course, that is at 4 to 6% on a year-on-year basis. The demand outlook, the headcount trend, the senior management attrition rate, and the deal wins and the order book in the pipeline is something that the street will be watching out for Infosys.
All right, keep an eye on all of these metrics for Infosys that's going to report its Q1 numbers today. But we also have Vamakshi standing by to take you through a list of all the stocks that brokerages are keeping on their radar this morning. Vamakshi, good morning. We've got notes from Nomura, Phillip Capital as well as Nuvama this morning. What stocks are these guys tracking?
Well, yes, a very good morning to you as well. Let's first start off with Bajaj Consumer. This stock is in focus on the back of a brokerage note that has come in from Nuvama. They have upgraded their rating on this counter from hold to buy and also hiked their target price from 173 per share to 258 per share. Largely the factors that they have highlighted for this is that they're expecting Q1 to likely be a very strong start to the rest of the year. The hair oil market in India is not declining anymore. In fact, they're expecting Bajaj consumers' volumes to recover and see a healthy growth. Margins are also expected to see a jump given RMO is down sharply, and given this backdrop, they're expecting the stock to re-rate from here on, which is why Nuvama has gone ahead and upgraded its target price as well as its rating on Bajaj Consumer. Other than that, watch out for electronic manufacturing services industry. We have a note coming in from Phillip Capital, and they have highlighted that Indian EMS is a nearly 6 lakh crore opportunity. Especially printed circuit board assembly is a game-changing 6.5 lakh crore opportunity. And other than that, we're also seeing that India is emerging as a manufacturing as well as exporting hub. So a lot of positive factors lined up there, and which is why they've gone ahead and initiated coverage with a buy rating on all of these EMS counters with the likes of Keynes, Sirma, Avalon as well as CNTLM, and on the back of that, watch out for these counters. And lastly, focusing on Ipca Labs, you have a note coming in from Nomura, and they're seeing some near-term risk to consensus estimates. They are not expecting a resolution of regulatory issues in the near term as well, which is why they've gone ahead and in fact they've believed that FY24 and 25 EPS estimates are expected to be nearly 8.5 to 12% below their consensus. So overall, Nomura has maintained its neutral rating but cut the target price on Ipca from 911 to 866 per share.
All right, we will be tracking all those companies very closely. Moving on then, the countdown has begun for RIL and Jio Financial Services demerger today. Every share of RIL will be equal to a share of Jio Financial. Now, the NSE is to conduct a special price discovery session of RIL following that demerger. My colleague Anisha is here with more details on that. Take it away, Anisha.
Well, yes, tomorrow there will be an important adjustment that will happen for Reliance Industries. There will be a special pre-open session that will be there between 9 to 10 a.m. And of course, the normal trading will begin only at 10 a.m. Now, what is this adjustment? Well, we understand that, of course, there is this Reliance Jio Financial Services which will get separately listed. The record date was around July 19th, and that is when the shareholders would have become eligible for the 1:1 share for Reliance Industries and Reliance Jio Financial Services. Tomorrow, when it comes to 9 to 10 a.m., there will be a special pre-open window wherein price will be discovered for Jio Financial Services, and then Reliance Industries will trade X of that. Now, what do we mean by that? Imagine the closing price of Reliance was around 100 rupees. Tomorrow in the pre-open session, if the special discovered price of Reliance Jio Financial Services is 10 rupees, that will mean that from 10 a.m. tomorrow onwards, Reliance Industries will start trading at 90 rupees, and that 10 rupees will become a fixed value as far as Jio Financial Services is concerned, and that will become the constant price when it comes to the Nifty 50 as well. Because as per the new norms which have been set out for the spin-offs etc. as far as NSE BSE is concerned, this spun-off entity will become temporarily part of Nifty 50 and other indices as well, and will continue to be at a constant price, which will be the discovered price that will be done in 9 to 10 a.m. onwards. Of course, you cannot trade in Reliance Jio Financial Services right now. For that, Reliance has to come out with the allotment details and the listing date of that entity, and only then you can start trading in that. But temporarily speaking, there will be an adjustment that happens in the share price of Reliance. That will become X of Reliance Jio Financial Services tomorrow, and there will be a constant price that will be derived for Reliance Jio Financial Services. Now, what the street is expecting is that the value of Reliance Jio Financial Services can be anywhere between 170 to 200 rupees. So, come tomorrow, Reliance will trade at the value which is closing price minus between this 170 to 200 rupees, and that will become the new share price for Reliance Industries. So, this is the first time perhaps that we are all witnessing this special pre-session window, and that's why there is these questions around it. But simply put, it is the window wherein the price will be discovered for Reliance Jio Financial Services, and then Reliance Industries will trade normally from 10 a.m. onwards. Fresh contracts will be issued basis that discovered price of Reliance Industries as well as Reliance Jio Financial Services.
Thanks for those details. We will for sure be eyeing this mega demerger that's going to happen today, and Reliance will trade at an X price starting 10 a.m. in today's trading session. With that, we're completely out of time on this edition of Market Cafe, but don't go anywhere. The market takes all the action ahead.